Tuesday, April 9th. Stan Ehrlich, Market Analysis. Good morning. This is a little late to 10:23 California time. Sorry about that. And I'm going to start out with not this. Sorry about that. Let me get this out of the way real quick. And we're going to start out with the stock market indexes, the spider, and the daily data chart, not the 1 minute. Okay, the key here is last Thursday, we had a giant bearish engulfing. Too bad it wasn't overbought. And as a result, I don't have a signal per se, but everything is there to start a move down. Friday, it popped back a little higher in the middle of the range of Thursday, but that's okay. Didn't go anywhere yesterday, and today we're down some. I want to close below Thursday's low. That would cause, I believe, another sharp break, closing below Thursday's low. My downside objective is at first 503 to 497, but I don't think that's going to hold. It might bounce off of that, but I think in the next 1 to 2 months, we're going to go down to 480, more exactly 477 to about 465. In this area, you also have a 382 fib retracement and a 50% fib retracement from the October lows of last year to the highest high we saw only a week or so ago. Next chart. Spider. And the same comments go basically for the other indexes, which I'll go through very quickly, so there's not too much new to say. This happens to be the 5 minute spider. We opened, rallied to a slight new high for Friday, Monday, and today, but nothing close to the high on Thursday, which is critically important, and dropped like a rock all of a sudden this morning, bounced back some, and now maybe inching its way down to maybe new lows. But we're down 1.4 momentarily. The E-mini down 14 or 1.4 and did the same thing. We've got a bearish engulfing. And if as long as it stays lower than the previous close, that's good. Next, E-mini, same thing. Like what I see, this happens to be the 10-minute chart. And current data. There's your quick break this morning, down 14 at the moment. Highest high several days ago, way up there. But it's this killer break that on the SPY was over a 10-point break in 1 day, and also within a couple of hours or less. Huge. Unexpected, but I must tell you that I started talking about thin air, risky business to be buying, very critical price levels. Watch out, the damn thing might turn around just about exactly, and this is a 10-minute chart, just about right there, 10:30 California time, last Thursday, April 4th. Go back and listen to my recording. That big crash did not happen yet until an hour later. So I'm looking for lower levels, significantly lower, taking a month or two to go down. And I'll continue to talk about it, whether it works or not, of course, until I finally give up on it or it works. QQQ. We've got same thing, bearish, a couple of different support levels on the way down, but my real downside objective is between 412 and 395. Fairly wide area, but let's get down to 12 and see if I can justify a lot more. Probably not. Next is the same chart, the Qs, except for a 5 minute. Opened, made an attempt to make new highs, couldn't hold it. Kaboom. Outside down day, momentarily just a little bit lower, not much. NASDAQ futures, June, bearish engulfing. I think this minor support level right around 1840 area. Yeah, I'll be a little more precise. As we start getting below 18009, then we're going to drop off much faster and quicker. That would be a new low for about a month, maybe even more. Actually, since the 22nd of February, a little less than a month. But that's exactly what I want, and I think is going to happen soon. Next, and we've got the NASDAQ 1 minute chart, and you can see that quick break this morning. Now let's get into the Russell. I'm going to pass on it, but we do have a outside trading range today, momentarily slightly higher. And for the moment on the other Russell short term, well, it's also a daily, just a different symbol. The micro, I believe, same situation. Next, bonds and notes. Bonds have popped up to resistance. I think it's going to stop here, maybe a little bit higher. I can allow something up to maybe 119, but that's about it. And we're 1730, about a point higher, maybe. And then I think it's going to turn down and make new lows. We're in a downward slanting channel, so that the bottom of the channel, whatever price it's going to be day by day, it goes down a little bit lower. Pardon me, is going to be the last and final support and the last and final turn before it goes up through the bear trend line at the top of the channel and starts to trend higher for a long time to come. And that should, I think, happen in the next month or two. Next to the 10-year notes. I've got the same kind of situation on the 10-year notes, but a double top seems to be the right thing to look at. And its downside objective, I've measured for weeks now. We almost got to today, only a few ticks left. So for all, yesterday, sorry, that's yesterday's low. So for all practical purposes, my downside objective right here has been met, but not exactly. I'm still slightly bearish. Objectives are not necessarily a turning point, and they can easily be surpassed. And I think that's what's going to happen by a modest amount. Next, we've got the same chart, but a 5 minute on 10-year notes. So yesterday's low, we're bouncing out of it a little bit in a classic zigzag fashion. Nothing wrong with this, not very bullish, no new highs of any decent. We're up against resistance, bearish. Next, crude, heat, unleaded. So here's the crude, upside exhaustion gap, overbought conditions, starting to work down, now low and last almost, and I'd love to see it close below yesterday's lows. I think we're easily going to come down to 82.75, but this zone goes down to 89.12. So somewhere in that support level, closer to the lows of it, I think, we're going to see this market dip down to in the next couple, 3 weeks. For the natural gas, we had a bullish engulfing yesterday, but it's not really a good signal, because ER signal, because it was not oversold. But for natural gas, I can justify a little bit more strength. But you can see here plainly the trend is down based on what's been loaded in data, and this is typically usually a lot longer amount of data than this, but that's what I've got to work with momentarily. I don't want to change the time frame. I'm bearish. Rally should be sold. I'll try to pick up the next rally high and yell bloody murder, sell it short when it comes. Next, gold, silver, platinum, and then copper. Gold's overbought. I think it's going to turn down any time now. It's been overbought for too long. The highs and the overbought levels are extreme, a little above 90. Very rare to see it in the 90s. The last time we did top out, but not for much. It only came down for about a week and then went straight back up again. I think it's about to do the same thing, but a lot bigger downside move. Wouldn't be surprised if it came all the way back down to the 220s. Yeah, well, below specifically 2200, 2220 and below. Next, silver. Same thing. Looking for major reversals. Don't trust this rally. Too overbought. Way up there. We're currently at this moment, 92. In all of this time frame, silver hasn't been to 92. And I'll actually pull this, whoops. Yeah, let's slide it. And I'm just looking for an overbought 92. I don't see one. Yeah, maybe back here. on that day. And that was that rally. Wow. See what I mean? It gets this extreme. It's super dangerous to be bullish. Everybody loves the way it's acting because it's going straight up. If you're long, you better brace your sell stops. You better watch out. No other comment. But it's about to turn down, in my opinion, very, very soon. And for a big retracement, I'm expecting it to come down to below 26. Next, platinum. Now also overbought for the first day. Between a rock and a hard spot, didn't quite get to resistance. I think it's about to turn down. The last time it did get overbought is right here, and you were at the top of the market. The last time it got overbought was for just a fraction of a day, the top of the market. The last time it got overbought for 3 or 3.5 days, we had a bearish engulfing signal on the high day, top of the market. Next chart, copper. This head and shoulder bottom is normally in the wrong place. It's usually at the bottom of a bear market. Now, yeah, it was at the bottom of a couple of months worth of decline, but I wouldn't call that really a bear market. It's head and shoulder bottom, very possibly in a major support area at the bottom of a decline after we saw the lowest low of the bear market. So it's sort of semi-acceptable. The point is, there it is, shoulder, head, shoulder, neckline, upside objective, and we almost got there. I mean, we came up to the resistance area, we're overbought, and very, very much so. 86 is very high, and it's about to turn down. What can I say? And it got 90+% probably of my upside objective fulfilled already, and it may still get up to my objective. Next, soybeans, oil, meal, corn, and wheat. Now, in a general sense, in the grain market, there are some bullish patterns trying to form. They need some more strength, some more time to really look good. But the beginning, maybe, of these bottoms is just barely beginning to show up a little. If we start to rally in soybeans above 12.25, then I'm going to be a lot more adamant about being bullish. But right now, you got a bear trend, new lows a month or so ago, late February, beginning of March, and the rally has stopped. And we've seen a little bit of new lows for the last few weeks. Since then, I'm expecting a test of the lows and a new low for the trend. But I got to keep that concept of a bottom forming slightly alive, but I don't believe it yet. Have to be neutral to bearish. Soybean oil, here you go. Shoulder, head, shoulder, maybe. We have to go all the way up to get to this neckline at 60 plus. It goes down a little bit every day. But this head and shoulder is very unique. If it's a legitimate pattern, it's forming inside of a channel. And I probably should change the colors on these two lines. But that's the bottom of the channel, and that's the top of the channel. So a head and shoulder inside of a channel is fairly rare. But it certainly looks good so far. But it's not anywhere near a breakout. And it's so easy for this last shoulder to get totally damaged by making another new low. So we'll see what happens. Neutral to bearish, with something in the back of my head saying, hey, there's a chance, but I got to see more bullish move. What about meal? Well, meal has a broad double bottom and a very good long-term support area that held with a buy signal smack dab on the lowest low. And we got the corn on the lowest low, and we got wheat on the lowest low, all three of them. You'll see it in a moment. In a support area, oversold, bullish engulfing, bingo. Ehrlich reversal, buy signal, turn the price action green. All is working fine. Almost got stopped out or made a lower low, but it didn't a few days ago. Now, I'm not pretending we're still long from the original signal. It made a trade. It made a very small amount of money. We're out. But the original signal is, so far, the lowest low back on February 29th. That's what I like. These lowest lows are frequently at major turning points, whether it takes off like a bat out of hell or not. This one hasn't. I want to see it close above these recent highs in order to start talking a little bit more bullishly. Right now, hey, buy signal at the bottom. We're not much higher. It's been a month and a half. Why are we waiting so long, routine? Resistance to stop rallies, and we're a little bit between that rock and a hard spot. Need a close above 350 or a close below 323 to cause the next big move up or down. Next, corn. We caught the low exactly. Nice trade, route, reaction, held, no lower lows. Starting to come back up, sort of. I really can't be very optimistic. Something like the rest of the grain commentary. We're just kind of going sideways here. But the system has so far caught the bottom, which has a chance of being the lowest low for a long time to come. I can't say that's going to be the fact. But if it starts closing above 450, I'm going to be talking about that. On the other hand, if you get a downside breakout with a new low below 408, it's going to drop off a lot more. Next, same kind of thing. We got the bottom to the exact day in wheat, and it's a double buy signal, which is rare. I can't remember the last one I had back to back. I've seen a few where it took 3 days, a day in the middle, but not two of them right next to each other. So far, so good. In fact, yesterday or the day before was a new high since then, and no lower lows. So wheat's doing a little bit better. Okay, cattle and hogs. Cattle, new lows, oversold, needs a bounce, starting to bounce yesterday, sort of. A little bit better bounce today, high and last. I don't trust it. Not going to go that far. Maybe we can get up to 180. I doubt that. But somewhere between here and 180, I'm expecting it to turn back down again. But I can't help it. We're oversold. We're bouncing like I thought we would. Not much trust in this. Hogs, just about the exact opposite. We have a gap up. Gaps are almost always closed below the market, below the low of last Thursday. We're overbought pretty good, 85. Not tremendous, but pretty darn overbought. In a resistance area, overbought and a gap. Looks like it's going to turn down any damn moment. And we're currently trading near the high of the day, high and last. So it's, to the layman, the neophyte, it certainly doesn't look like it's about to turn down. We'll see what happens. Okay, now I'm going to go to my trade session charts to show you the ICE exchange. RBOB, overbought, turned down today. New lows for the previous 3 days today. I expect a little more retracement. Maybe we started a bear move, but right now, all I can tell you is a little more reaction, a little bit more of a dip and a bull trend. So we could make new highs again relatively soon. No particular great signal. A little divergence, new highs in price, but not a new high in the indicator. So a little ambiguous, maybe a top of some consequence. If you're so inclined, your risk is medium to small. Depends upon how low you think it's going to go over what time period. For a scalper, you're a day late. Next, OJ, pennant formation, sideways, gotta wait, nothing happening. Cotton, buy signal yesterday. We did not get below yesterday's low. We came very close. We are a little below the opening, which was below our bid this morning on the opening for the ER3 long positions. And we're just waiting to be proven right or wrong. If I make it below the yellow dots, 86.11, I'm wrong. I'm out. Small loss. Frankly, from today's opening, which was, today's opening, which was 86.79. So I'll lose 60 cents or so, 68 cents. Not bad, not terrible. If it starts to go up, Then I'm looking for a rally probably up to 91.5, if not even higher. A good signal so far, but not making money so far. Next. Spike top yesterday, overbought, blow off top, lousy close, just a little bit higher, nowhere near closing above previous highs. So that's not good. Making new highs in overbought conditions and not staying there causes market to do exactly what it did by the end of the day. And today we're not doing anything. We're up just barely 16 ticks, not much. Inside day, doji. That's it. Can't really say anything, but I think it could have topped out. I need to close below 9,137. Then I will proclaim, that the market has topped out. We'll have a little bit of a broadening top formation. You know, this qualifies so far. Broadening top, rally high 1, next day 2, couple days later 3, couple of days later lower low 4, and then yesterday 5, the last number, higher high. You've got it. There's your 1, 2, 3, 4, 5. This is a broadening top formation, and if it works, we're going to have an immediate break of this support line, then a move back up somewhere into the resistance, and then new lows again. These can be very bearish. So far, it hasn't started. And it may end up not being a broadening top. But so far, it looks like it could be. And we're going to cotton, the rag. Overbought, closing lower yesterday, barely higher today. Yesterday's activity does produce a top sometimes. Sorry to say it's not a bearish engulfing, so I didn't get a red signal. But I think you have to consider it a short sale. Not very risky because we're close to previous tops. If it does work, we're going to go back down to 192. Not bad. Pretty good sized move. If that doesn't hold, watch out. Bigger move down. Next. Sugar. Support level kind of holding. Neutral RSI. Nothing there. Not much to say. Passing. And we're back to our RBOB. So profitable trading to you. See you tomorrow.